How's it going, everyone? Today we're going to talk about some delicious investing, some oil and gas producers. Okay, they're enjoying some of the most profitable 6 months ever on record. So, if you never invested in oil and gas, well, maybe it's not a bad idea. So, according to the Financial Times, they have reaped a windfall of get this, hundreds of billions of dollars since this past February. Hundreds of billions of dollars. That is massive. So obviously, this is all aided by the energy crisis, the EU crisis, the global crisis, post C-19 stuff. And then on top of that, you have a lot of producers here in the United States that were basically stopped mid-tracks by, government regulations, that pipeline. So the crunch is real. So according to the aggregate net income for publicly listed oil and gas companies operating here in the United States exceeded 200 billion for the second and third quarters of this year. This is according to Financial Times report. Okay, this is an analysis of earnings report and estimates carried out by the S&P Global Commodity Insights for the Financial Times. So the media outlet reported over the weekend, citing this analysis, that U.S. oil companies have cashed in on a period of geopolitical turmoil due to, of course, a conflict with Russia, Ukraine, that have shaken up the energy market. So not only is the energy market shaken up, but this is a global problem. I mean, we have reports of China upping their consumption of Russian energy, and all these prices, all these issues, these geopolitical issues, have sent every single commodity price through the roof. So the $200 billion figure included super majors, mid-size, integrated groups, and these smaller shale operators. Okay, they mark the sector's most profitable 6 months on record, and it puts it on course for an unheard of, unprecedented year of mad, insane profits. Operating cash flow will likely be record-breaking, or at least very close to it, by the year's end. This is according to Executive Director for Upstream Equity Research at S&P. The report also noted that last week, the current president basically dubbed this crazy outsized, insane earnings a windfall of war, accusing these U.S. companies of profiteering from the conflict, people's misery. But that's just not true. It wasn't their fault what happened with Russia, the energy crisis, what's going on with China. It's what happened with C-19. The U.S. oil and gas companies, they actually suffered tremendously during the pandemic, the issues arising during those years. They had to get rid of the oil and gas because there was no buyers. They were basically giving it away. They had to pay people to take it away. So the current president threatened to ask Congress to hit these producers with higher taxes. More taxes solve problems. Just remember that, guys. So unless they invested the cash, the dividend cash haul into pumping more oil to bring down the prices. I mean, hard to believe that this would even be an idea. So responding to the prospects of a windfall tax, the chief executive of ExxonMobil, which had its most profitable quarter ever on record, reportedly said his company's chunky dividend should be considered its way of returning, and I quote, returning some of our profits directly to the American people. Interesting. Financial Times continues, they're saying that the profits have been actually underpinned by soaring free cash flow, okay, a key industry metric, which is defined as cash flow from operations minus the capital spending. Also pointing out that the benchmark Brent crude has averaged more than $105 per barrel over the second and third quarters. This is well above the average of around $70 per barrel over the last 5 years. The Brent has hit a high of almost $140 in early March this year. So Wall Street reportedly demanded that companies prioritize shareholder returns over expensive drilling campaigns in pursuit of ever greater output growth. Now this makes sense because, again, going back to 2020, 2021, they were getting rid of oil and gas at such low prices, it just made no sense. Nobody was seeing any returns for a couple of years. So they really suffered quite a bit. So according to the estimates from investment bank Raymond James, they're saying that capital spending by the world's 50 biggest producers will be around $300 billion by the end of this year. This sounds like a lot of money, but this is actually half of what it was in 2013. Half of the capital spending. So 2013 was the last time the barrel prices were comparable. Okay, so they're spending half as much, and that's how they're getting part of their windfall dividend earnings. The industry shifted from drill baby drill to focusing on what shareholders actually want, which of course is a return of capital. They want some of that money back. They want to see some of those investment returns. This is according to analysts at Raymond James. Dividends and share buybacks have never been as generous as they are now. And of course, part of that is because the capital spending has been cut in half. That's quite a bit. That's $300 billion in savings from these producers. So they're able to put this money back in their pockets. But remember, it takes a lot of money. It takes a lot of investment. It takes decades to get your money back when you're drilling for oil. Now, we have to remember that all of this crazy energy crisis issues are really against this macro backdrop, okay? And part of that has a lot to do with the de-dollarization of commodity markets, the petrodollar, the big problem, the big kahuna, the US dollar. Although it's enjoying its peak years, especially compared to other currencies because of inflations, all that stuff, the U.S. has that privileged position of the petrodollar. But according to former Lehman Brothers executive Lawrence McDonald, he's saying that this is the end of it. This is the end of the ride high dollar world. And of course, we have the BRIC countries joining together. They're working on something with Russia and China. Brazil. This is problematic for the U.S. So according to the Lehman Brothers former exec, he's saying that this de-dollarization might not happen overnight. It's not a short-term problem per se. It might take 20 to 30 years, but it's going to happen, and he sees it as kind of inevitable. So if you take these concepts together, we're talking about the energy crisis, the global energy crisis. You got, on one hand, you have the de-dollarization problem, and on the other hand, you have the energy crisis problem. And the world is going to need energy for the foreseeable future, as far as the eye can see. So you have currencies that are getting devalued, right? And then you have energy, which is always going to be needed, okay? And then you put those two concepts together, you can actually fight inflation. You can actually fight the currency getting destroyed by inflation by parking your money in commodities, okay? Because nothing is going to change for the foreseeable future. Back to the Lehman Brothers exec, Lawrence McDonald. He served as VP of Distressed Debt and Convertible Securities Trading at Lehman Brothers. He said that the weaponization of SWIFT financial systems harms the greenback's dominance, the dollar dominance. Why? Because people don't trust it anymore. You can get sanctioned at a moment's notice, lose your reserves that your country has, and that's weaponizing the dollar. So what does this do? Well, this pushes people, they're pushed into a corner, and they need to protect their money. Where can you protect your money? Other substitutes. One of them, of course, is the energy markets. He goes on to critique the U.S. usage of the sanctions and the SWIFT game. He calls it a game. Says that the West should only use this every 10 years, but that the U.S. has been using it against multiple countries at multiple times. So sanctions against Russia in a war is okay, But from U.S. perspective, the problem is if you hit 10 different countries over the head with the petrodollar and sanctions, well, guess what? You're losing trust in the dollar system. Then what do? They form a bloc, hence the BRICS countries. So we see evidence of this happening all over the place, right? Even the G20 presidency held by Indonesia this year, they have started talking about de-dollarizing international trade. What are they going to use? Well, national local currencies. China, Russia, switching payments to national currencies. They see it as a process of global de-dollarization. And this is happening with Japan, got Malaysia, G20 financial summit. This is a big deal. So I'll keep an eye out on this stuff. Congratulations again if you are enjoying some of the windfall revenues from your oil investments. That's it for this one, guys. Smash the like, subscribe if you haven't, and I'll see you in the next one.
Can anybody out there